All right, good day, ladies and gentlemen. You're welcome to our platform, weltrade, a trading platform that can breed both synthetic and trading of forex, currency, gold, and all the like. So let's quickly look at it. For beginners, they are very important thing that so crucial for you. Now, so take note, you can snap this stuff, you can snap this picture on how effectively you trade your pain and gain or your flips. But I think pain and gain will give you the type of money you are looking for faster. So how should you trade pain and gain? So pay attention to this for them. So take a screenshot of this. First, we call something daily bias. Second, we call trend and structural bias. And then we call something top-down analysis. Then we have market trigger, then market entries at or model. And then we have trade management and trade journal. Okay, so now let's quickly take any of the instruments that we see. Then you can support yourself with some indicators, but don't depend on indicators. Okay, so now I'm going to go, this is an instrument. So what should I do? I'm going to go to daily time frame perhaps. So if I go to daily time frame, it's very simple. So this is pain 600. Now look at pain 600 on a higher time frame. If you look at it on a daily time frame, you see that pain 600 is in an uptrend. So on a bigger picture, this is a low, this is a high, this is a low, this is a high. So that means an uptrend. So, but if I'm going to go back to even a basic structure here, if I take the structure from here, so what is very important for you is that this was a downtrend and this is an uptrend. So let's quickly take on this daily time frame. So we said, if you look at it, the daily bias. So you want to look at the present day where you are. So assuming where you can was this day. So this candle was bullish. This candle was bullish. So if the previous day was bullish, and then the day you come to meet was equally bullish, so you have said that this new day should be bullish. So that's the daily bias. So I'm not going to detail about that, but you can use it to actually accelerate your trade. Then that one, the next one is that you want to know the structural bias. That is, are we in an uptrend or a downtrend? So if I even use trend line, for instance, like this, you know that you are in an uptrend. So then other thing you could use is called indicator. So you can add here me, and so you probably can just use one or two. So majorly, if you use two, so let's quickly do that. If you use two, maybe you just want to know a strong trend and a medium trend. So the one you use to measure a strong trend is 200 moving average. And so you're going to click and then just to make it to differentiate it as you want. So I'm going to take off all of this just to know that this is a major trend on. So for our daily time frame. So now the next is to make use of 50. So you can use 50 moving average. So you change this one to 50. So 50 show you at least a trend, and then that is not too over strong, but at least a shorter one. So if you look at it, so even if you don't know how to check where is the trend going, so having seen that the market is above 50, then you can use it. The additional indicator probably you want to add is called MACD, MACD. Now, don't use MACD like how many people use it. MACD is purely used for momentum to understand the market activities. So most time I actually use my own MACD differently, but so let's leave it the way it is. So now the MACD has histogram, has moving average, and then they have a zero line. So now let's hide it. So let's go. So number one, let's look at the trend of this market. So this market start from here. So let me show you very quickly. So I take this part to look at from here to here. So no trend. This is downtrend. Then we have a here. Now, this is not a swing point. So this is the recent point. And the market is just going up. You get that? So if you use this is a sweep and this is not a swing. So it's an internal. A swing must break a structure. And that's one of the things you want to do. So most time, if it's on daily time frame, may not show you what you are looking for practically. So, but you know that the market is bullish. So let's go to 4 hours to do top-down analysis. and sometimes you want to look at where to wait for the market. So 4 hours is a very powerful time frame. So it can give you clearer picture of a strength and all of that than maybe daily. Can you see that? So you can see on 4 hours, you can see on 4 hours how the market has been going. Now, but when you come, there's something called important area of focus. Now, all you want when you come are simple things. First, you want to look at what we call recent break. Recent break. You have already known that these markets are not trend. So where's a recent break? So let's take it now. This is a recent break here. This is a recent break of structure. So if this is recent break of structure, so what you want to do is to identify area of focus. That is where you envisage the market will come back to. Okay, so I just want to change this one. Okay, so let's change this one to the right top, and then right. So oh, sorry. Okay, so medium. Oh, sorry, middle. Yeah, center. Okay, so now, so this is a recent break. So now, normally, as a trader, you have to pay attention to important thing. Now, this is a break of structure. So because you already know that this is an uptrend, so all you are looking for is that there's a high and there's a low. So this is swing high and a swing low. So the market has broken this. So that means this market is still going up. Now, but there's something called origin. Where is the market coming from? The market is coming from down. So the source, the beginning of that should be all of this place. So, but there's what we call another block, or so a demand zone. So when market is going up. So here, the first thing I'm going to check is the market actually has not pulled back, but this is like a liquidity created on 4 hours. So what I'm going to do is that I'll take my Fibonacci. So you need to know how to make use of it. It's very simple. And track from a swing low to swing high because I want to buy. So this your Fibonacci, you need to edit it sometime. It just get messy. I use minus 0.25. So this one that is here, I clean the number and use minus, okay, minus 0.5. And I will explain to you. So now if I use minus 0.5, okay, I take out this because I mostly don't stay using that. So I take out every other number that I'm not going to be using. Okay, then I take out the background so that I can see what I'm doing per time. Okay, I take out prices, and this level I put it as percentage. Okay, and then I change this one to right so that the whole labeling will be somewhere here. So this is what happened. So now, having done this, so what you're expecting is that, okay, let this market, if it's going to pull back and for me to see a buy, so you want the market to come back to this point. Now, simple looking at it, top-down analysis means, so this place I just mark here now, I'll take away this Fibonacci retracement. So what you're doing is simple. If you take away this Fibonacci retracement, so you expect the market until it come down here. Now, so there are things you now want to check. So if you look at this point now, this other block creates what the fair value gap here. So look at it here. So you want to just look at, okay, this market, so to come down to this area of focus. So when it come down to this point is when you want to be looking for a buy. Now, but sometimes you will now go back, okay, this is 4 hours. You want to go to 1 hour. That's what we call top-down analysis to see maybe there are better, faster way that the market is going to give you a buy or a sell. Okay, so now we'll go to 1 hour too. You can see that this was the major break. All of these are internal structure, so you have to understand that. So this break is still similar. This is liquidity. That's an engineer liquidity. So that means 1 hour too is still the same thing. So this is what we call top-down analysis. So sometimes you can find some trade. So if I go to 30 minutes, all right. So you could find some trade by the structure of 30 minutes or even 15 minutes and all of that. But the best bet is that you keep calm and let the market come to a reasonable level where you can now take the trade as much as possible. Okay. So now when the market come down to this area, you want to see another change. right? Maybe market structure shift or change in direction of the market. What you call change of character. So as it were now, this market is still bubbling. So, but if you're on 15 minutes, you probably will have been seeing some trade. So let me take off all of this so that you will not get confused. So if I'm on 15 minutes, this market is still going up. So when this market, if it crashes all of a sudden, you are still maintaining that this market was going to get this now. So if on 15 minutes, now, but you have to be careful the way you just stay on a lower time frame. So this will inform your decision and all that. But best bet is that allow the market to come down here and you look for a buy and continue. This is the simplest way of trading. All right. So if you look at another instrument, let's look at the 600 as gain 600. So let's look at it. Okay, so not all the time you use your indicator of moving average and all that, so you don't confuse you. You want to look at the structure properly. So you go back to your daily time frame now. So we'll come back here on daily time frame to see the market. So now look at this market on daily structure gains. Okay, so if we use this gain now, market is already bearish. So let's go by this. So market is already bearish. We have a high here, we have a low, a high, a low, a high. Another low is lower than this, so high. So this combined together. So to actually getting what it is, so you now look at daily bias. So look at this market. Yeah, so are we going, we're still going down because you're looking at a trend. So going to 4 hours may give you a clearer structure as it were. So you are doing your top-down analysis. So it's a downtrend. Can you see that? Low, high, and all that. Now we are here. What's this market about to do? It's about to change direction. Will it work? So let's look at it. So this is a low and this is a high, another low. So that means, let's look at something here. So if I take my fib here from this to this high, so that means I should be buying. Okay, on 4 hours, yes, I should be buying. Oh, why should I buy? So quickly look at it. So that means I should be buying this market. Yeah, so if we buy this market, so what will happen? This is a point of area of focus. Market has come down there. So I could go to straight down to like 15 minutes to see the market changing direction. So let's look at it. Okay. So 15 minutes. So when it came here, so look at it. This is a structure, a high, a low, a high, then create another low. So lower low. So we now have this here. So this is a break of structure. This is another structure. Do we have up to 3 candles? Yes. It's another structure. So this is a high. So that means what's going to happen? I will have taken this trade. Is this a high, low, right? So it's a low, it's a high. So this is a break, then retracement. If you look at low retracement, that means you are looking at this right or the block. So you're now taking a trade. Your stop loss will be below here, and you take your profit looking at the next high, or you go to the higher time frame. So now this market now, this is a high, it's a low, it's a high. So now that means, oh, it has created a kind of equal high. So it's now becoming more risky. So, but let's look at it here. We take my Fibonacci for this is swing low and to this high. So if you come over here, it's already getting invalidated. So, but give and take, you see an opportunity if the market was going again. So this is how you actually trade the market in a simplified way. Okay. It doesn't matter which instrument is that. Okay. So you can always use your pure price actions in combination with liquid concept. So look at this one. So look at 15 minutes. This is gain 400. Okay, so again, 400 is a breakout structure. You wait for it here. So anytime it come down, but patience is required. If not, you jump at this market irregularly, and then you cause problem for yourself. So, ladies and gentlemen, this is just the basic thing I have to show you as a beginner. when you are taking a trade, understand the bias, the structural bias, and wait for a retracement back to where the market origin was sourced from, and then can trade. So this is just a simple highlight of taking a trade. And then once you find an entry position, now you now want to make use different tools like this. So if I'm longing from here now, for instance, I put in when the market come there to confirm, and I put in my 1:2 risk rewards, the first target. Then you can now extend other position if the market continue to engineer up as much as possible. Okay, so this is a basic thing. It doesn't matter which market or which instrument, it's the same pattern using trading them. So look at flip one. So this one's okay, you can flip one, for instance. So, but if we go to, let's go to 4 hours. Okay, so look at 4 hours. What would you say with this market now? So this market, we have a high, a low, a high, a low. Now these are triple equal, right? So now it's now having that kind of a support. So that means you are having a range of this market. You get back here, you sell down. So you're now going to be very careful. So I don't want to complicate to show you some horizontal key level or demand and supply zone, but they are very, very important. So basically, it's just an introduction for us to maximize trade in weltrade synthetics, painx and gainx. All right, thank you very much. And pay attention. If you are in an ecosystem in Port Harcourt, we do live trading, all right, powered by weltrade. That's every Thursday, morning till afternoon. Trade forex and synthetic altogether. So don't fail. Every Thursday, you come to the office or training center, where we do that in Port Harcourt. It's number 49 Odawa Road, right? Opposite Mimiti, okay, close to Rumuomasi and about Rumuomasi, Port Harcourt, River State, number 49 Chidinma Plaza. Thank you very much. And we have, of course, we do live session, run training as regular as possible. Okay, so do have a nice time and bye for now.